club, cinema hall, hospital, charitable institution, educational institutions, and so far. So very important constituent of this chapter, and the first one will be starting with the government audit. So giving a background, what is government audit? Government audit is as old as organized governments have been into picture. So it mainly focuses upon different areas of government, that is political, social, economic development, and properly account and developing of selected members of parliament, which is constituted by Parliament of India. So also the UN handbook, United Nations handbook on government auditing and developing country defines government audit in a comprehensive manner, which is as follows. So government auditing is the objective, systematic, professional and independent examination of financial, administrative and other operations of, of a public entity, sorry, made subsequently to their execution for the purpose of evaluating and verifying them, which presents a picture containing explanatory comments on audit findings by responsible officials, and in the case of examination of financial statements, wherein an appropriate professional opinion is expressed on the fairness of its preparation. So, more or less, it is same objective as it is of a normal auditing, that is expressing the opinion that a professional expresses regarding the fairness of presentation. Now we'll come to objectives. So, A, objectives first is accounting for public funds. So, government audit serves as a mechanism or process for public accounting of government funds. Then there is appraisal of government policies. So, it also provides public accounting of operational, management, program, and policy aspects of public administration, as well as accountability of the officials who is administering the team, that is administering them. Then there's a base for corrective actions. Audit observations based on factual data collection also serve to highlight the lapses of the lower hierarchy. So we see here administrative accountability. So government audit is neither equipped nor intended to function as an investigation agency. Government audit is not functioning as an investigating agency, but it is to pursue every irregularity or misdemeanor to its logical end. So main objective of audit is combination of ensuring accountability of administration and functioning as an aid to administration, that is help to administration. So in India, government audit is discharged by the independent statutory authority of Comptroller and Auditor General through the Agency of Indian Audit and Accounts Department. Audit here is a necessary function for accountability. So Comptroller and Auditor General discharges his functions. We'll here see the legal framework and Comptroller and Auditor General. So basically, the Constitution of India contains specific provisions regarding appointment, salary, duties, and powers of CNAG. That is Comptroller and Auditor General of India. We'll first see the appointment and removal. So CNAG is appointed by President of India and shall not be removed from office except on the ground of proven misbehavior or incapacity. Also, he can be removed only when each house of parliament, okay, that is deciding to do so and voting not less than 2/3%. That is, special resolution is required to remove an CNAG from the office. Tenure. Now, CNAG is taking the salary and the tenure which is fixed for the office prescribing, and salary is equal to the salary of judge of a Supreme Court. that is strengthening his independence. So, of course, high salary is given keeping in mind this perspective that they should not have place for extra bribe or taking undue advantages from public or taking extra privileges. So they are well high paid, so that they are not supposed to likely fall into any nuisance or nuisance. Now, these are various constitutional provisions. Article 149, it states that CNAG shall perform duties and exercise such powers in relation to union and states and any other authority given. Article 150 tells us that the accounts of the union and of the state shall be kept in such a form that is at the advice of president. Sorry, president is keeping on the advice of CNAG. Article 151 requires that reports of CNAG relating to accounts of union and state shall be submitted. See, those reports are submitted to the president or governor, who shall cause them to be laid before the House of Parliament or state legislature. Now we'll be seeing Comptroller and Auditor General's duties and powers. So first point under duties, it is the first and foremost duty, one of the important duty to compile and submit accounts of union and states. So the Comptroller and Auditor General shall be responsible for compiling the accounts of all the unions and states which they have, their initial and subsidiary accounts, and which are under his control by treasuries, offices or departments responsible for keeping such account. So here the CNAG would prepare in each account, showing under respective head the annual receipts and disbursement for the purpose of union and state. Also here, the CNAG of 1971 has, okay, CNAG Act of 1971 has provisions for relieving him of his responsibility to give information and render assistance to the union and states. Relieving means releasing. CNAG is not liable for giving information and render assistance to the union and states here. So the Comptroller and Auditor General, insofar for the compilation of keeping of which he is responsible, enable him to give to the union government or state government as the case may be. Next important duty is to provide general provisions relating to audit. So it shall be the duty of CNAG to audit and report on all expenditure from the consolidated fund of India and of each state. Next, to audit and report all transactions of the union and states relating to contingency funds and public accounts. C point, to audit and report on all trading, manufacturing and P&L accounts and balance sheets and other subsidiary accounts. Third duty is to do audit of receipts and expenditure. Okay, where any body or authority is substantially financed by grants or loans from the consolidated funds of India. So here it is the duty, or CNAG is subject to the provisions of law that he is auditing all the receipts and expenditure of that body. So meaning of substantially financed is to grant major of the loan, that is not less than 75% of the total expenditure is carried on by the government, or the amount is not less than 25 lakhs. These are the two criteria. Next duty is audit of grant or loans. So where any grant or loan is given for any specific purpose from the consolidated fund of India or on any state, so here it is the duty of the Comptroller and Auditor General that he shall scrutinize the procedures by which the sanctioning authority satisfies itself as to fulfillment of the conditions subject to which grants or loans are given. Okay, next important duty is is audit of receipts of Union of States. So it shall be the duty of Comptroller and Auditor General to audit all receipts which are payable into the Consolidated Fund of India and of each state and union territory having a legislative assembly. Okay, this legislative assembly, and here the CNAJ would satisfy himself that the rules and procedures which are in behalf are designed for effective check on the assessment. Okay, any doubt so far, Anil?
No doubts, ma'am.
Okay, we'll go to the next duty, duty number 6, audit of accounts of stores and inventories. So the Comptroller and Auditor General shall have authority to report on the accounts of stores and inventory kept in any office or department of the union or state. Seventh point, audit of government companies and corporation again is a duty of CNAG. So the CNAG, in relation to the audit of accounts of government companies, shall be performed by him with the provisions of Companies Act 2013. So the Comptroller and Auditor General, he shall appoint the first auditor under section 139(5) or 139(7), that is appointment of first auditor or subsequent auditor. Also, the accounts of the government company are required to be audited by that auditor which is appointed by the CNAG, and that auditor shall submit a copy of the audit report to CNAG. Okay, the CNAG will take action wherein required, and he will be scrutinizing the audit done by the auditor which is appointed by him. After duties, we'll see the powers of CNAG. So the CNAG gives the following powers to the in connection with performance of his duties. So he can inspect any office of accounts which is under the control of union or state government, which includes office responsible for the creation of initial subsidiary accounts. Also, any accounts, books, paper, or documents which are relevant to the transaction under audit that can be required by CNAG. He has access to those documents. Next power is to put such questions or make observation that he thinks that is considered, okay, that is required to the person who is in charge, and he may require for preparation of any account or report. Say for example, the CNAG wants a memorandum P&L account of that particular department, or he wants cash flow of last 6 months. So any report which the CNAG is finding it necessary as per his professional judgment, he can ask to the office in charge wherein it is under government's rule. Next point, so last part here, one of the which is mentioned here in our book is to carry out the audit, and he can have any part of detailed account, any class or transaction. Say for example, there is inventory kept with government of 100 lakhs for previous months. Okay, in that case, the CNAG has right for a part, say for example 20 lakhs, scrutiny how it was cross verified or checked physically last month or during the audit. So CNAG has this right or power. He can ask for any part of the detailed audit which is required. Next important point here comes as expenditure audit. So audit of government expenditure is one of the major component of government audit. Basic standards set are authorized by competent authority who fixes the limits within which the expenditure shall be done. So these standards are that the expenditure conforms to the relevant provisions, and that audit is known as audit against rules and orders. Also, there should be a proper sanction. It can be special or general, which is accorded by the competent authority, which is authorizing that expenditure, and audit of that Those particular sanctions is known as audit of sanctions. Second important point. Third is there are provisions made for to release any expenditure. So audit of those provisions comes under the category of audit against provision of funds. Expenditure is incurred due regard to broad and general principles of financial propriety. Such audit is called as proprietary audit. And there are various programs, schemes, and projects where large financial expenditure are incurred, but they are run economically and they are yielding results which were expected. Such type of audit which checks the performance is known as performance audit. So, five categories here under expenditure audit. We'll discuss one by one. First is audit against rules and orders. So, audit against rules and orders ensures that the expenditure conforms to the relevant constitution, and it also seeks that expenditure is in accordance with the financial rules, regulations, and orders which are issued by the competent authority. Also, it is against regularity. Sorry, audit of expenditure against regularity is of a quasi-judicial type of work or quasi-judicial type of work which is performed by the audit authorities. It involves interpretation of the constitution, statutes, rules, regulations, or orders. So, final power of interpretation, how to interpret or how to consider one of the rules, statute, regulation, that does not vest with CNAG. So, this can come in correct, incorrect. These rules, regulations, and orders against which uh, regularity audit is conducted mainly fall under the following categories. So, rules and orders regulating the powers to incur and sanction expenditure from the Consolidated Fund of India or of a state and contingency fund. Next is rules and orders dealing with mode of presentation of claims against government withdrawing monies from consolidated fund, contingency fund, and public accounts of the government. Next, we see rules and orders regulating the conditions of service, pay, and allowances and pensions of government servants. So, it is the function of executive government to frame rules and regulations which are observed, and for these various rules, regulations, and orders, the audit function has to be carried out to see that these rules and regulations are not inconsistent with any provisions. They are inconsistent with essential requirements of audit. They do not conflict with orders, and in case they have not been separately approved by the competent authority, the necessary rule making power is approving them. Audit of sanctions. So, auditor has to ensure that each item of expenditure is covered by a sanction that can be general or special. Also, by virtue of the powers vested by the provisions, these rules and delegations of financial powers are made by the competent authority to do so. This was the second category under expenditure audit, that is audit of sanctions. Third is audit against provision of fund. So whatever provisions are made aiming or ascertaining a certain expenditure that has to be incurred, for which special grant or appropriation has been provided, and that amount of expenditure should not exceed the appropriation made. So this has to be taken care in audit against provision of funds. Proprietary audit. So according to proprietary audit, the auditors try to bring out cases of improper, avoidable, or ineffective expenditure, even though those expenditure have been in conformity with existing rules and regulations. So, as and when the time passed, it was felt that regulatory audit alone was not sufficient to protect public interest, but also That transaction should satisfy all requirements of regulatory audit. Here we have an example. Let's say a building may be constructed for installing a telephone exchange, but may not be used for the same purpose. So this results in unproductive expenditure. Or a school building may be constructed but used after 5 years of its completion. So this is also a case of avoidable expenditure which can be avoided now. So you know, the hard-earned money of general public which they pay as taxes to the government are one of the sources of income which government has, and these expenditures are done out of those income, those sources of fund for the government. So it is very important to note whatever expense or expenditure is done out of that, there is a clear cut scrutiny and audit for the same. So here also audit against proprietary confirms general principles which are as below. So that expenditure should not be a prima facie more than the occasion demands. So every public officer is expected to exercise the same vigilance in respect of expenditure incurred from public monies. Okay, as a person of ordinary prudence would exercise in respect of his own money. So खुद का अमाउंट जैसे खर्चा कर सकते थे उसी हिसाब से you have to treat this amount also with wise prudence. This is what is one of the requirements of principles here. Second is no authority should exercise its power of sanctioning to pass an order which will be directly or indirectly to its own advantage. So no personal interest should be carried out from the government money here. Public monies should not be utilized for the benefit of a particular person, particular section, or particular community unless the amount of expenditure involved is insignificant or a claim for the amount could be enforced in court of law, or the expenditure is in pursuance of a recognized policy or custom, and the amount of allowances, that is traveling allowances, etc., they should be regulated. Also, it is a responsibility of executive department to enforce economy in public expenditure. So the function of audit is to bring to the notice of the proper authorities of wastefulness in public administration. So there's a diagram given here, 5 points explaining which we just revised. Next is performance audit, the fifth part. Performance audit covers full scope audit which looks into efficiency, economy, and effectiveness. Efficiency looks into whether the various schemes projects are executed and their operations conducted are economically okay and whether they are yielding the results. Economy audit looks into whether government have acquired the financial, human, and physical resources in an economical manner. Effectiveness audit is an appraisal of the performance of programs with reference to overall targeted objectives. Next is efficiency cum performance audit. So wherever this word is used, its objective is to examine the financial and operational performance of an organization. So the procedure which covers this performance audit covers identification of topic, preliminary study, planning, execution of audit, and reporting. Is expenditure audit clear to you?
Yes, ma'am.
We'll come to audit of receipts. Okay, is this going slow, fast, more detailed is required, or we can go a little fast, or the speed is okay? How's it?
Ma'am, it's okay, ma'am. We can go with this speed.
Oh, okay. So we can continue with the same pace?
Yes, ma'am.
Perfect. Next is audit of receipts. So audit of receipts is neither all pervasive or as old as audit expenditure, but it has come to stay in some countries. And such audit requires checking whether all the revenues or other debts due to the government have been correctly assessed, realized, and credited to government account by designated authorities, whether adequate regulations and procedures have been framed by the department agency concerned, whether such regulations and procedures are actually being carried out, whether adequate checks are imposed to ensure the prompt detection and investigation of irregularities, double funds, fraudulent or forged refund vouchers, or other loss of revenue through fraud or willful omission. Next is review of systems and procedure to see that the internal procedures adequately secure correct. So review of systems and procedures see that the internal procedures adequately secure correct and regular accounting of demands, collection and refunds. Next point is the extent and quantum of audit required to be done under each category of audit are determined by CNAG. So here, institutional mechanism provides for primary check by the auditor to test, check by the supervisor, and control and direction by the group leader. So here, planning, execution, and reporting of work is directed and monitored at middle level and top level of the audit hierarchy. So there are built-in arrangements with the CNAG, which ensures that the work is assigned to each employee and it is carrying out. Next is audit of stores and inventories. So audit of accounts of stores and inventories has been developed as a part of expenditure audit with reference to the duties and responsibilities entrusted to CNAG. So that is conducted to ascertain whether the regulations governing purchase, receipt, and issue, custody and sale and inventory taking of stores are well devised and properly carried out. Also to bring to the notice of the government any deficiencies in quantities of stores, to verify that the purchases are properly sanctioned, made economical in accordance with the rules, to ensure that prices paid are reasonable and in agreement with those shown in the contract, to check accounts of receipts, issues, and balances regarding accuracy, correctness, and reasonableness of balances in inventory with particular reference. Next, we see here audit of commercial accounts. So public enterprises are required to maintain commercial accounts, and those are categorized under three categories. So these classification include first as departmental enterprise, which are engaged in commercial and trading operations. Next is statutory bodies, corporations which are created by specific statutes. Government companies which are set up under the Companies Act 2013. So the audit of departmental concern is undertaken in the same manner as department of any department of government where commercial accounts are kept. Regarding statutory bodies or corporations, that depends upon nature and type of statute governing the bodies or corporations. So financial accounts audit is conducted by CNAG. Government companies is conducted by their own auditors under the statutes, which are appointed by the CNAG. And in addition to that, CNAG conducts a supplementary test of audit. Also, CNAG has adopted the mechanism of audit board, which comprises representatives of audit and nominees of government, including functional specialists, to process, review, or appraisal on performance. The role of CNAG is prescribed under subsection 5, 6, and 7 of Section 143 of Companies Act 2013. First role is to appoint, CNAG has the power to appoint government company auditor. So Section 143, subsection 5 states that in case of government company or any other company owned or controlled directly or indirectly by the central government, first auditor and subsequent auditor can be appointed by the CNAG under subsection 5 or subsection 7 of section 139. Next, we see power to conduct supplementary audit and comment thereupon. So, the Comptroller and Auditor General of India shall, within 60 days from the date of receipt, he can conduct a supplementary audit under section 143(6)(a). He comments upon or supplements such audit report which is under section 146 subsection B, subsection 6 clause B. So any comments which are given by the Comptroller and Auditor General of India, the audit report shall be sent by the company to every person and entitled to copies, and every member of the company, every trustee, debenture holder or debentures, or any other persons so entitled before the annual general meeting of the company is held. Next is test audit. So test audit, the Common Auditor General audit is conducted by professional auditors appointed on the advice of the CNAG, and the latter is authorized under section 143 of the Companies Act. CNAG shall direct the manner in which companies' accounts shall be audited by the statutory auditors. CNAG has power to conduct a supplementary test or audit test in companies' accounts. Also, the stat auditor shall submit a copy of their audit report, and CNAG who shall have a right to comment upon the supplement the audit report, they should do in such a manner as he may think fit. Also, the general standards, principles, techniques, and procedures for audit adopted by the CNAG are a mixture of government audit and commercial audits, which are known and practiced by professional auditors. Now we'll see the reporting procedures. So, the effectiveness of an audit depends on reporting results to the proper authority. So, generally, here it is usually safeguarded in the Constitution and related enactments. Next, we see in India, the reporting is factual and the conclusions are left to be drawn by the reader. This is presumably to ensure total objectivity. Nothing debars or stops CNAG from making recommendations in the audit report. Next, we come to, yes, Anil.
Yeah, ma'am.
Okay, next is audit of local bodies. So is the government audit clear so far?
Yes, ma'am.
Next part, we come to audit of local bodies. So here, a municipality can be defined as a unit of local self-government in an urban area. So the term local government is ordinarily understood the administration of a locality, that is a village, town, city, or any other area which is smaller than the state, by a body that is representing the local inhabitants, which possess largely autonomy. So, discussion in following paragraphs is based on the article Audit of Municipal Administration by R. Chandra Shekharan. So, by 1947, the year of independence, most of the urban and semi-urban areas were constituted into municipalities, and primary locations under those were Mumbai, Chennai, and Kolkata, each with a special kind of constitutional structure for better financial resources. So municipal government in India covers 5 distinct type of urban local authorities. Those are the municipal corporation, the municipal council, notified area, the town area committees, and the cantonment committees. So municipal authorities are endowed with specific local functionings which cover regulatory, maintenance, and development activities. Expenditure incurred by municipalities and corporations can be broadly classified under following following 6 heads. First is general administrative and revenue collection. Second is public health, public safety, education, public works, and others such as interest payments, etc. So property taxes and octroi are the major sources of revenue of municipal authority. Other municipal tax such as profession tax, non-mechanized vehicle tax, taxes on advertisement, animal and boats, tolls, show tax, these also come under this category. So local bodies may receive different type of grant from the state administration as well. So broadly, the revenue grants which are received are of three categories. First is general purpose grant. So these are primarily intended to substantially bridge the gap between needs and resources of the local bodies. Second is specific purpose grant. So those are for certain services or performance of certain tasks. Third is statutory and compensatory grants. So under various enactment, these are given to local bodies as compensation on account of loss of any revenue on taking over the tax by state government from local authority. Now we see financial administration. So some of the aspects here include budgetary procedure. So budgetary procedure is to subserve the twin consideration of financial accountability and control of expenditure. So main objective here is to ensure that funds are raised and monies are spent by executive department in accordance with rules and regulations. So municipal budget formats and heads of accounts vary from state to state. There are variations between corporation and municipalities. One important function of municipal budget is there is no strict separation between revenue and capital items. So usually there is a head called extraordinary items which cover most of the capital transactions. Also, in case of some separate budgets, specific municipal functions like education, water supply and sanitation, transport, electricity, etc. budgets are formed. Next, we see expenditure control. So system of financial control existing in the state and central government is conditioned by the fact that there is clear demarcation between between legislature and executive. Moreover, separation of executive powers and functions in municipal government cannot accommodate the existence of an independent finance officer who is responsible to the municipal council or its executive committee. So this leaves the system of external audit by state government as the only instrument of controlling municipal expenditure. That is this expenditure control. We see accounting system. So municipal accounting and budget format have been criticized as neither simple nor comprehensible. Now, objective of audit of local bodies comprise of reporting on the fairness of the content and presentation of financial statements, reporting upon strength and weaknesses of the system, reporting on the adherence to legal and administrative requirements, reporting upon whether value is being fully received, and detection and prevention of fraud, error, and misuse of resources. So audit is another method of financial control on local governments, and this provision is coupled with privilege of ultra vires. That is, action of local authority if it is beyond legal authority that can result in surcharge by audit. This procedure is legacy of colonial days, and even in England, it has been resorted to less and less. In addition to external audit, it is also opined by the learned author that there should be a system of internal audit as well. This kind of audit focuses with efficiency, economy, and effectiveness, sometimes known as the three E's. Okay, efficiency, economy, and effectiveness. So we see appointment, which is one of the constituent of audit program for local bodies. So under appointment, the local fund audit wing is generally in charge of municipal accounts. Sometimes bigger municipal corporations like Delhi, Mumbai have power to appoint their own auditors. Auditors concerned here should report on